Here we are a little past the bottom of the hour. I'm Andrew Kraft. Let's talk about the economy. Let's talk about the stock market there. Fox's Rebecca Castor has a look at how some of these tariffs might be impacting the stock market. Let's watch.
April 2nd is reciprocal tariff day for the White House. And President Trump says no country will be spared, even key trading partners like Canada and Mexico.
This country has been ripped off from every nation in the world, every company outside in the world. We've been ripped off at levels never seen before, and all we're going to do is get it back.
The looming trade war comes as Canadians elect their next prime minister, former Bank of Canada Governor Mark Carney. And it seems he has no plans to fold first.
And my government will keep our tariffs on until the Americans show us respect.
In a sit-down interview on Fox Business Sunday, Trump suggested tariff rates could increase and didn't dismiss possible economic pain as a result.
You know, the tariffs could go up as time goes by, and they may go up.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big.
The markets plunged at the open Monday morning on all the tariff uncertainty, and stocks just had their worst week in 6 months, with the S&P 500 dropping 3.1% and NASDAQ down 3.45%. Ontario Premier Doug Ford is also set to move forward today with a 25% tariff on electricity that will hit consumers in 3 states, Michigan, Minnesota, and New York. In Washington, Rebecca Castor, Fox News.
Rebecca, thanks so much. In the meantime here, the Trump White House is responding, though, to some of these economic concerns. They put out a statement via the White House press pool today. Saying this: since President Trump was elected, industry leaders have responded to President Trump's America First economic agenda of tariffs, deregulation, and the unleashing of American energy with trillions in investment commitments that will create thousands of new jobs. President Trump delivered historic job, wage, and investment growth in his first term and is set to do so again in his second term. And so that's the line from the White House at this hour here. I want to bring into the conversation there at Investor Business Daily, our friend Alissa Coram. She joins me. Alissa, thanks for being with us here. And I have to ask, so you heard there Trump was on with Maria Bartiromo over the weekend, and he said this when asked if we are going to see a recession sometime this year. He said, I hate to predict things like that. He says there's a period of transition because what we're doing is very big. He said we're bringing wealth back to America. That's a big thing. So is it premature to bring up the R word already?
Yeah. Hey, I think the best stock market investors out there steer away from predictions as well, because you have to follow the market's lead right now. Not only is the news flow negative, fear is increasing. And last week, the declines, as that report just showed, the weekly declines were in the 3% range. Today alone, the NASDAQ down 4%. Of course, we're getting even more into the oversold territory, which means dip buyers are going to want to come in, and maybe we'll see even a short-term bounce here. But I would say if you're looking at stock market history, there are times where the news flow can still be net negative and the market can turn. So anything can happen. I'm not predicting here either, along with our president. But right now, the tone is very defensive, very risk off. And I want to see more signs that institutions are coming in and buying again. We haven't really seen that yet.
So, Alissa, I have to ask, the market did so bad today. The S&P 500 fell 2.7%, Dow Jones 2.1%, the NASDAQ composite sank 4% here. You know as well as anyone, markets don't like unpredictability, uncertainty. They don't like it. Is that what we're seeing here with the tariffs specifically here? Just the market naturally respond?
No doubt. And you've seen that play out over the last couple of weeks in particular, I would say. Any tariff-related headline, there have been jolts. And now with the deadlines here, the tariffs being enacted, and there's been a little bit of movement in terms of the dates of when things are happening as this is being used as a negotiation tactic, in addition to an external revenue type play here. But now that the tariffs are here, and especially with the comments from Trump, the fact that he didn't rule out a recession, the R word, as you mentioned, of course, that is going to spook markets. at least in the short term, because we've already seen this weakness over the last couple of weeks. It's been pretty ugly out there in the market, and now today, pretty brutal. So the selling, I'm not quite convinced it's over yet, but anything can happen in the market.
So, Alissa, why, though, the hypersensitivity with some of these investors in so many different, industries and venues and sectors here?
Yeah. So I think if you rewind the clock, when the election happened, that was a risk event, of course. And so when we got the results, very definitive, the market was in go mode. And for about 6+ weeks, it was a raging bull market. Then in mid-December, you had Fed Chair Jerome Powell come out and essentially pumping the brakes in anticipation of these tariff policies from Trump, saying, we're going to wait and see. We don't know what the impact is going to be. And with investors already looking, in late 2024 into 2025 to see, okay, what is going to be the rate cut path like? Hearing this from Powell, that right there was the warning sign. And ever since then, even really before Trump took office, any economic headline, economic report, quote from Powell, you've seen this sort of knee-jerk sensitivity. That is what changed from that period of growth after the election is starting in mid-December. So I think the markets were already on edge. And now that we're getting more of this news flow out of Washington, the tone has shifted, at least here in the short term, even if in the long term, there are still bullish catalysts that we could see. The short-term picture has dimmed a bit.
So, Alissa, I wanted to ask as well, we got this somewhat tepid jobs number on Friday. To your point, we're nearing government shutdown territory for this next Friday, upcoming Friday here. More vulnerability, more uncertainty. Where is this going from here? Is it going to rebound by the end of the week, do you think, or no?
We'll have to see. I mean, with the 4% decline today, and already, we're double-digit percentages off the highs for the major indexes. That gets my technical radar up in terms of seeing a potential oversold bounce, at least raising the odds for that. That doesn't necessarily mean it's going to happen, but I do think that you still have this market where we had big gains in 2023. Much of 2024. So there are dip buyers out there who are salivating at the prospect of stocks being bought at cheaper levels. But the problem there is we don't know if it's going to be a sustainable bounce if and when it happens. If it's this week or next week, we'll have to see. But what traders out there want to look for are a couple of days of strength. I think we've seen a lot of head fakes in the last couple of weeks. You've seen big percentage gains, but on a one-off basis, but we've seen a chop lower. So a lot of volatility here. It could take just a catalyst or two or a tweet, who knows, to get the market moving again. But don't take one day in isolation. I think that's very important. That's how you can get really hurt in the market trying to pick a bottom. Wait to see more evidence of a turn that can actually be sustained. And then from there, what I'm really looking at is, will we get back to new highs and start to see more positive catalysts and investor confidence really coming back to the market? Or are we going to be in a situation like late 2021 into early 2022 where that developed into more of a bear market, even when you had some bounces that kind of tricked some folks to getting in before we rolled over? So it's an important time to be very nimble in the market with all of the uncertainty out there, as you said.
So would you describe what happened today as the entree into a bear market, or no? Are we still premature on that? And we always like to leave with some positive news. So if you could find some positive indicator in the overall U.S. economy right now today, what would it be?
Okay, so for the first part of your question, correction, bear market, we're definitely in correction territory, I would say. And as an investor, I wouldn't get so hung up on the terminology. Right now, there's a lot of selling in the market. hopefully investors out there, if you have recently purchased stocks and you're down on them, I would say now's the time to get out of the way. Even if we could be bottoming around here, you don't want to get yourself into a scenario where you're digging a really deep hole if the selling persists and we do see more of a prolonged bear market. But I think the silver lining is that when you have these market corrections on the other side, there are opportunities to make money in the market as an individual investor for those who are watching out there. And if you take that step back, you look at themes like artificial intelligence, very promising, driving the market ahead over the last couple of years. Perhaps we'll see some new leadership coming out of the other side of this. And another potential catalyst could be tax cuts. So I think that you need to stay open-minded. Don't get caught up in the doom and gloom. Be very aware that you need to protect your portfolio at this juncture, but be ready because a positive catalyst could be just around the corner.
All right, there, Alissa Coram with Investor Business Daily. Always appreciate your insight into the market. We'll talk soon.
Thank you.